What is up, you degenerates, chat lurkers, and everyone out there riding this Fed-fueled roller coaster? It's your favorite flow sniffer, Max Pitts, with your end-of-day recap, powered by Investor Central Club and too much free time and no friends on my end. So, from Powell mind games to Palantir plunge, today had more drama than the Real Housewives reunion. And if you've ever seen the Real Housewives, you would definitely understand that reference. Let's break it all down. Sarcasm, stats, and stonks. Nobody's safe in this fucking recap, baby. But let's move on to it. Today, we have the S&P 500 closed down 0.77%, almost 1%. The Dow Jones tanked 0.95%, nearly 400 points just absolutely erased. And the NASDAQ got clapped, absolutely clapped for 0.87%. Now, some context here. Day one of the Fed's two-day policy meeting kicked off, and investors are already sweating like they're holding weeklies on expiration day. Everyone's bracing for what Powell will say tomorrow. No rate cut expected, but the real kicker is how the Fed interprets Trump's tariff rampage. Speaking of which, tariffs are back on the menu, baby. Yep, we're back. From movies to medicine, yep, Trump hinted at the new pharma tariffs on top of the Hollywood tax bomb. This isn't just noise. This is markets absolutely moving and grooving. Now, in a new format that I'm trying out, we're going to go ahead and head over to Investor Central Club. If you want actionable real-time insights and easy insights to read for that matter, go ahead and sign up for Investor Central Club today. By the way, we got that code 125 to get your first month for only $25. That's less than you're spending on those bullshit Starbucks drinks you drink every single day. But we're already open here, so let's go ahead and dive straight into things. Let's talk about our flow scanner first. With SPY, we had 56 million in total flow, and it was split pretty evenly. We had 30 million in calls against 25 million in puts. Classic hedged based bets going into Powell Day. With QQQ, we had 24.85 million in total flow. And the Bears showed up and showed out with 21.6 million in puts versus the 3.1 million in calls. The big red flag if tech doesn't absolutely rebound tomorrow after Palantir's faceplant. IWM saw 24.3 million in flow with 2.7 million in calls against the 21 million in puts. Someone thinks small caps are about to get absolutely stomped out, but let's be honest, if we're at 20-year highs, then how are broke bitches about to afford these things? Interest rates. Let's be honest here, they're not. So they are about to get clapped. Anyways, Amazon, our fourth, came within 22.76 million in flow, 22 million in calls against 674K in puts. Almost all bullish here, folks. Is this a Fed risk? But hey, again, what Fed risk other than Jerome coming out there and saying some horrible stuff? Now, some honorable mentions. We had AMD 13.4 million in flow ahead of earnings, mostly bullish with 11.5 million in calls. Palantir, 11 million total with a split sentiment, but the stock still dropped 14% after earnings. Smart money may be bouncing out before it's too late. And we also had MSTR or a Mister with 4.85 million in flow with 2.86 million in put bets. Is it that big Mr. Sweep we saw about to get liquidated? Anyways, let's go ahead and move on to some dark pool drama because you guys don't care about the flow. You care about where is the money about to go. Yeah, because we with the flow. But SPY, we saw 199 million in dark pool prints at the 561.50 level. Tesla saw 109.6 million in size, all routed through dark pools. Someone's loading or unloading behind closed doors. We also had QUAL, FNDX, and VTV, which each saw over 250 million national traded. Big money is playing sector ETFs ahead of tomorrow's decision. So is this a defensive play? Maybe. Dark pools are where institutions are going to make those moves without tipping the market. These blocks hint at serious prepping for the Fed outcomes. Now let's go ahead and switch back and talk about some of our earnings disasters. So first things first, Palantir had strong numbers, strong guidance, but still got smoked, down 14%. And why? The valuation is off the rails. Traders are calling it irrational exuberance, aka they don't know what they really do, and people have been paying way too much money to figure out what they do. Ford, however, recovered from early losses, good earnings, but tariffs are still kicking the auto industry's ass. But don't worry, because the dip buyers came in and bought that up quicker than a fat lady at a Mexican restaurant. We also had AMD, SMCI, and Rivian earnings after the bell today. Stay tuned. Chip and EV names could swing the market tomorrow. Now, let's go ahead and talk about some tariffs. Everybody's favorite things. Wait, hold on. Trump's trade war just turned into a global game of chicken. Pharma stocks like Lilly and MRK sold off on tariff threats. Mattel pulled guidance, says Barbie's getting expensive thanks to import costs. And Philips warned of a $300 million hit to margins for these new duties that they're going to have to take on. We're entering an economic era where headlines carry more weight than the earnings reports. Tariffs risks are now baked into guidance. Now, let's go ahead and talk about some of our macro madness. We had oil bouncing here. Oil rebounded 4% after hitting 4-year lows. It's still down, however, 17% year to date. Shale CEOs says this price just doesn't work for them at the end of the day. Who knows what that means? Wages are less than Fed fund rates. Wall Street's Neil Dutta says that a recession red flag historically when wages grow slower than rates, a slowdown will then follow. And let's not forget about some currency chaos here, folks. Asian currencies are surging, the dollar is wobbling, and a reversal of the Asian crisis is in reverse. All right. But this is what we're watching tomorrow. And by the way, we're doing a post-market wrap with Investor Central Club. But we have the Fed decision at 2 p.m. Eastern. No rate change expected, but Powell's words will shake the tape one way or the other. Disney, we have earnings before the bell. Parks versus streaming will drive the story. And options flow in the open. Watch QQQ and SPY for the volatility read. So let's go ahead and make like a condom and wrap this up. Stocks are down across the board. Markets hate uncertainty. Dark pool flows in SPY and Tesla show stealth accumulation of risk-off hedging, essentially. And Palantir cracked under valuation pressure despite a solid quarter. It looks like burning short sellers who like to fund their portfolios for cocaine with your stock is just not enough to move the market. Now, pro tip, expect Powell's press conference to swing the market 2 to 3 times tomorrow. Don't get chopped, size down, play levels, and don't forget to respect the flow, folks. If you see something massive in the morning, don't ignore it. It's definitely something to pay attention to. If this made you smarter or at least less confused, I don't know if this is making you smarter, smash that like. Go ahead and domestically abuse that subscribe button to stay ahead of the algo curve, and drop your Powell prediction in the comments, and whoever gets the closest, maybe I'll give $1,000 to. Until tomorrow, stay savage, trade safe, and follow the flow, and sign up for Investor Central Club, because less than $1 a day for institutional moves? How are you trading then, my friend? All your favorite Furus, and I can guarantee you most of your favorite Discord rooms are using it to give you call outs. So, hey, just saying. Have a good night.